is such a routine for us, right? I see you on Tuesday, I see you on Saturday. It's all at 3 p.m. I always say that this is a critical time of the day to wake you up, make you worried, then you can go on for the rest of the day. So today we're talking about audit, right? This is a tax filing season. Every time when we start filing taxes for our past year, 2024, there's always worries lingering in the air, like you come to the preparer's office, say, I'm ready to file taxes. Then you'll say, oh, am I going to be audited? And you might ask for that, right? So why are people talking like that? It's because filing taxes is literally is becoming a opportunities to be audited. So you are in the pool of data, and the IRS has all kind of tools to do analysis to decide who's going to be audited. So today we're going to talk about that, and also letting you know what you can do to minimize your risk, right? It's mathematics, right? Minimize the risk doesn't mean get rid of the risk. It's, other than someone died, there's always risk, right? So minimize the risk, understand what IRS is doing, know that when you file your taxes, what you do would trigger the red flag. So that's today. Let's get going. So what I'm showing you here is our website. I want to introduce our website to you because here has a lot of tools for you to resolve your issue. You can come to the onboard with us where you can upload your document, write us a note saying that, hey, Ying, I want to be your client. Here's my document, here's my notes. So we will take you over, and instead of you sending your data across the internet, and who knows, maybe your computer will be compromised. And our firm, we have so much security, our computer do not get compromised. But, to be safe, you upload them into our onboarding portal. You can also click the appointment button to see the partners. And then, of course, the rest of the 3 buttons are related to the clients who are already our client. You're working with us, you see your portal, you see your payroll portal, and you support us by paying invoices right here online. Then the other one slice I want to show you is our YouTube channel. Our YouTube channel is really packed knowledges, things that will help you to grow your business. It is always said that small business owners, a lot of times, we come from the place we know how to do the certain thing. I know how to cook, so I can open up a very nice restaurant because I know how to cook. But the knowledge in business doesn't just limit it to the back kitchen. It's actually related to everything else you do, all the way extended to your parking lot. So the knowledge we give you under YouTube, it is really to equip you. It is a free site. You come to learn, and it give you that free tool so you know what you need to do to get to where you want to be. That's why we call our firm we are a CPA firm that for client willing to go to next level. So we are your next level accounting firm, helping you to grow, to expand. In here, we have over 1,200 videos, and you can always search our video under this magnifying glasses. And when you type into the keyword, you're going to find videos. It is quite promising. We have very useful content there. Then, of course, about our firm, we have more than 40 professionals, and we have more than 12,000 clients. We have 28 years community service serving the public. We have 28 years practice history, and we speak 10 different languages collectively among our professional staff. So here we have 6 partners. We have 5 branches. And the newest one is Houston, Texas, is where I am today. So that's our newest one since July of 2024. We have, that number 3 is number of years I served at the IRS Advisory Committee. That number 2 is the 2 books I wrote, and I'll show you that very quickly. The number 1 is the one goal we have in our firm, very clear. And we didn't exist, we don't want to exist if we did not work for that one goal. That one goal is to serve small businesses with our heart and soul. And that's really how this firm is coming about. It is not somebody's hunger to be a owner. It is driven by the community. That's why we call our firm Community CPA, not somebody's last name, right? It's not coming from there. All right. This slide shows you the 2 books that are already on the internet. I wrote those 2 books, and then I'm working on the 3rd one. The first one, 8 a.m., starting up a business. 10 a.m., growing your business. 2 p.m. is the one I'm writing right now. That is to expand your business. Then, of course, I have a 6 p.m. That is repurpose your life after a long run of your business, right? You maybe already passed your business to your son, your daughter. You are repurposing your life at that time. So those are the books. Those are the 2 books that are upcoming. All right, no responsibility disclaimer, because this webinar, just like all the other webinars we have in the system, is a free education, and we want to offer you our insight. No reservation from our side. What we know, that's what we give to you. We hope to help you to grow your business. What is an income tax audit? Income tax audit, when we talk about this, of course, it's representing both federal and the state government. But here right now, we're talking, first with the federal government, right? So income tax audit, they invented that regulation, that procedure inside of the government to ensure compliance, to detect errors that taxpayers make, to prevent fraud, and to collect revenue. So easy to understand. That's the purpose of IRS, right? That's the purpose of the criminal investigation that IRS has, purpose of the auditors, all of that stuff. What type of audit? When you talk about audit in general, like how many type of those audit are like in general to normal citizens, right? I'm not talking about criminal investigation or whatsoever, but just regular citizens, you, me, and others. So what type of audit you see? Only 3 types. One is correspondence audit, which is more represented as a piece of paper. Yes, still a piece of paper nowadays. It's not email, okay? IRS don't email you. And only a piece of paper arriving to you. IRS don't call you. They're not calling you to say, hey, good luck, and you just won lotteries, you got audited. No, they don't do that. They send you a letter. So that's called correspondence audit. They send you a letter, ask you what they want, and then you send back to them. So this is not invasive, right? They ask for line items, then you just go back to what they ask. So a lot of people, when they got the correspondence audit, they overdo it. What I mean they overdo is they do amendment, they do all kind of things. No, don't go that far. When you get correspondence audit, they're asking you to justify your home office. Then you just supply the home office justification. If you realize that, oh, I did that wrong and I shouldn't be charging that, that's fine. And you don't need to go to amendment. You want just to tell the IRS that, oh yes, I claimed that wrong and I accept your changes. So they will give you the calculation, save you a lot of money to go around to the CPA firm, ask them to amend it for you. The problem is that even if you amend it, the IRS may not even look at it. They already assessed you anyway, right? So make sure that when you get a correspondence audit, don't overdo it. Office audit. Office audit is a little more in-depth than the correspondence audit because the file went from IRS all the way to your local office. So each year and for a certain time period, the IRS will give the local office a chunk of files that they should audit. And it is up to them to pick, say 50% of the one I gave you, you need to audit. So the local office will, based on the local situation, to select out of that list who to be audited. So the office audit normally is you as a taxpayers go to the office in the federal building. And if you're in the remote area, you can make arrangement, but typically that is how you go into the office, bring your bag of documents, and see the auditor in the office. When they see you in the office, you always realize that they see you in the office, their desk is bare, they have nothing on their desk because of the secrecy concern, right? They want your document to be private. You're in the private setting, and the auditor talking to you, and there's nobody else. So, can be intimidating because you're not going to see the auditor's family's pictures and things like that because they're just really setting up to meet you without giving anything out on their personal side. So don't expect to make friends with the officer when you meet them. They're really just working. If you can give them less trouble, get through all the documents they wanted, they love you that way, but you don't need to get into any personal even though you see them there. So that's office audit. Then the third one is field audit. Field audit means the auditor would be able to come to your door, knocking your door. Hello, hello. I am IRS auditor. Here's my badge, and I am coming to visit your business, visit your home office, visit your home. So they have the authority to do that. It's conducted at your location. So the horror story for IRS folks, when they went into the business side, they arranged them into such a hot place in the summer. It's just hard to bear. Like they couldn't stay very long because the condition is so rough. I mean, you hear those stories. Maybe the taxpayer's condition is that bad, so they couldn't give the auditor any better condition than what they have. But it could also be possible that the taxpayer was actually just making it hard for the auditor to stay. And our take is that when auditor comes to your business, everything they see is the information. So if they walk into your office, they see a secretary, and then they go into your office, they see the desk as people are working. And then on your tax return, they can be looking at things related to your setup. For example, your secretary, typically the secretary location, secretary level of positions is paid hourly. And it's an hourly employee that they would see on your income statement, right? And what if you didn't do it right and you have them under subcontractors or something, then obviously IRS doing that audit, they will make correction. Then you will owe a whole bunch of self-employment, Social Security, Medicare kind of taxes, right? So those are the things, audit types that the IRS would give you. So I want you to be aware of that. It's not like, I must be in the big trouble because I got a field audit. No, it is just the type of audit come through different different channels of IRS compliance side. So the correspondence are driven by CP 2000 with a machine, and the office audit are data analysis at IRS side. They felt like your report is kind of off the chart. That's why you were sent to compliance office. Field audit typically are done for the business. They want to know how you account your inventory. They want to know how many vehicles you really have. But on your tax return, they saw like 100 vehicles. They want to know whether you really do have them or it is just a made up number for your deduction, right? So those are the things. All right. So now we have federal government auditing you. We want you to know a key things over here. It is kind of also our tips for you to reduce your risk for being audited. So knowing that IRS has 3 years statutory limitation related to your audit, and that 3 years statutory limitation just means that after you filed your tax return, you can count 3 years. That's when IRS has a right to audit you at any time. And after you pass the 3 year statutory limitation, typically they don't go over your 4th year, 15 years. For example, right now we are in 2025 filing 2024 return. So after April 15, 2024 is submitted, so that's your first year. Go back 1 year, 2023. So go back 1 year, 2022. Go back one more year, 2021. So the tax return that filed on April 15 of 2021 is no longer subject to audit. Makes sense? So that's a 3-year statutory limitation, how you calculate it. Common triggers. Common trigger for your tax after you submit and get audited, data mismatch. Data mismatch just means that the IRS has a set of data and you also submitted your data. So you imagine a simple case where you work for an employer and your employer give you a W-2, right? And the employer also sent that data to Social Security and IRS, supposed to agree with each other. Imagine if you file a W-2 that is not the same as what your employer giving to IRS and Social Security, the data mismatch will happen. It's either your employer made a mistake or you made a mistake. So that's where the audit comes in, data mismatch. Data deviation score. This is an analytical procedure tools that IRS has. So what they do is they actually have this massive data coming in. Shows that, oh, if you run a construction company and you would have about, 70% of your hired labor is contractor, 25% of your hired labor are actually on W-2. And then they have that data across the country, divided by regions, and they can narrow down to a state, goes, oh yeah, in Minnesota, this is the ratio. And you are a construction company and you submitted your data, which is way not the right, and you literally don't have any payroll, you just have 100% almost on contract labor. That could be a deviation score too high, so IRS would audit you. So those are red flags, right? So you want to make sure that you're actually normal. And if you call yourself a construction company, you look normal like construction company. If you're a CPA firm, don't tell me you have a cost of goods sold in your CPA firm tax filing. No. What cost of goods sold? You don't have it. You are a service company. So all of these are generating red flags for IRS. They knew whether you're filing it properly or not. Data connections from other parties. That's another big trigger. So let's say one of your partner got audited, okay? Because that partner got divorced. And the wife suing husband. And then, one of them claimed innocent spouse. God knows what happened. So the IRS was auditing them. Then they realized that one of them getting a big K1 from the business, the IRS could going by the string and go or audit your motherhood of everything. So that is what we call the data connections. Just really depends. And I have gone through so many audits. I don't have a count because there's so many I have gone through for the past 28 years. I have seen maybe a handful. Definitely not a lot. Handful of the cases is becoming a massive earthquake because with one company it expanded too many. But other than that, the auditor's job is to finish their quota. So they don't normally come over to find more job for themselves. So with that said, I have not really seen a lot of data connection side of expansion in the audit, but it is a reason for IRS to audit you. And reported by whistleblower is another one. I mean, whistleblowers are the one that they think you are wrong. Or maybe they're your competitors, they're doing something awful to you. And I really have never proved that happened to our client. But then we have clients claiming that, like when they get audited, they claim that was the case. Really, we did go to IRS, go to the state to inquire about that, but no, we never really get a confirmation related to that. But it is true, a lot of Department of Labor's audit are generated from the whistleblowers. So they are the workers. They think they got paid less. They think they're being mistreated. So that's why they went to DOL and to report their bosses. So, that is one cause for being audited. Of course, if you file Schedule C and the Schedule E, and you welcome IRS to audit you, because those are the low-hanging fruits for IRS. People who are not seasoned into business, they file Schedule C, they file Schedule E. You saw our president's taxes, right? Whoever runs president, their income taxes are public information. I have not seen any one of them doing Schedule C and Schedule E. So that tells you. And if they're sophisticated, if you are seasoned business, you don't do Schedule C, Schedule E. But if you do, you are telling IRS that I'm, not very experienced, I could make mistake. So, making sure that I'm doing it right. So they have a higher audit rate for the people who have Schedule C with losses, right? Have asset and cash in other country, yes. So, those are IRS initiatives. One, IRS trying to crack down on people who move asset to overseas companies, and they will pay attention to what you reported in that little checkbox. So do you have foreign asset? And if you have foreign asset, do you have foreign deposit? Did you file the report? Did you file FinCEN report to report your asset in the bank account in the foreign country? All of these ones are triggers for IRS to look into you, especially if there is a special calling for that. So our new administration seemed to not like anything foreign, right? So with that said, maybe those are bigger triggers in the next 4 years. You claim EITC and CTC. These are low-income individuals, taxpayers, when you are getting a huge amount of refund from IRS because you qualify for EITC, CTC, kind of child tax credit, earned income tax credit. If you qualify for those, of course. These are free money to you. Not only they are declining for the next few years, and they are also a big red flag. And why are you on there? Are you hiding income? Things like that. So I would say, and there is red flags I listed in these pages, right? So then you say, well, Ying, sounded like there's no good ways to be safe. You can never be safe. Everybody is subject to be audited, right? And we can only say that you're safe by 99% if you do these things. So how do we do? There are ways to minimize your chance to be selected for audit. Number one, data match. Yes. Have you ever heard of data match? Community CPA have been doing data match for clients for what? Past 25 years? We existed for 28 years, but data match is something we put in the procedure for our clients, especially in the very beginning of the years. We use that for seniors because, grandma, grandpa come around. At that time, I was a lot younger, 28 years younger. Grandma, grandpa come around, and, one day it give you an interest income. The other day come around, give me another dividend distribution. Then you ask, do you have more? No, no more. We just filed tax return. Then they come back with another bunch of 1099 DIV. So I said to grandpa, grandma that, no, let's not do this. And you give me everything you have. I'm going to check with IRS to make sure that you really give me everything you have. So that's how we developed what we call a data match. We actually pull IRS data match to what you have, so grandma, grandpa can be safe, so they don't have to receive a lot of correspondence audit like the CP2000 stuff. So that is number one things we ask our clients to do. If you want your tax file to go in IRS with less than 99% of audit rate, with 99% will not be audited. Only 1% being audited. The risk is very slow, right? If you want the risk to be low and you want to subscribe to our service on data match, right? And stay legally compliant with governmental procedure, that's say without, that's just default. That's default. And I always say that if you understand the government regulation, rules, and what they impose, And if you have the right understanding of these rules and regulations, and you don't need to cut corners and to save taxes, you naturally will save. That's the power of knowledge. I always tell my folks, we want to be safe, we want to be low risk, but at the same time, we want to pay the least taxes we can pay because IRS don't need our tips. We want IRS to pay taxes, right? Even President Trump says tips may not be paying taxes, but if we pay tips to IRS, we want them to pay taxes, right? It's just a joke to make you remember what I said, but so bad we're not a entertainment specialist, so I don't know how to entertain people, but what I'm saying to you is you don't need to pay more to feel good about your taxes. I do have taxpayer. Oh, I want to pay more taxes because I feel more safe. Who told you that? You can pay more taxes, but IRS gonna look at your taxes and go, you should pay a lot more than what you paid. So your concept of more means nothing to the government. You just want to do it right? You also want to do a good bookkeeping. I can't tell you how important that is, accounting is. I know a lot of business think accounting is overhead. Accounting, they have to charge money. We don't do. At the end, I can just write down what numbers I have. I do not recommend that. And I would say that if you decided to go into business, you want to budget for your accounting and taxes. Treat that as your necessity. It is not a choice. You have to do good accounting. Good accounting will get you through audit like nothing. We have business, restaurant business, okay? Mexican restaurant business, there are two. Last year. Last year they got audited. They came through audit, no change. You understand what means no change? Field audit, the third type of audit, okay? So auditor went to the restaurant, and after they look at all of these things, look at the safe to see how much cash they have in there, all of these things, and it came back with the book we provided to the auditor, no change. So that is how important the accounting is. But we are the one did the accounting. But if you are doing the accounting, you can still do the same thing. But I want to say that clear, accurate bookkeeping is a must to defend your audit. Hire a professional. Just like I said, if you don't do it, someone else do it. But don't try to cut corners and you don't do it. Other people also don't do it. Then what? You're just going to bet on the 3 years to expire so you can get through 1 year? I mean, that is so much anxiety. I would not want my life quality to be like that. Anxiety is not good. You want to sleep soundly knowing that you're safe. All right? Of course, every time we talk about audit, we need to touch on the state. So the state audit has a different time period. I just want to give you these couple of ones because we have branches here. So Minnesota has a 3.5 years statutory limitation. California is 4 years. Iowa is 3 years. And Texas is 4 years. What does that mean? That means that we're filing 2024 tax return. Then in Texas, and they can audit you anything before 2020. They can audit you anything after 2020 because they have 4 year statutory limitation. All right, so that's what I want to point out to you. How long? People also ask how long can state collect on our business, right? And this is the part that I want to mention about the federal government. If you owe income tax to the federal government, do you know that they can only collect on you for 10 years? If they don't get the money back from you for 10 years, they secretively disappear. They don't collect anymore. That's their collection side of limitation, 10 years. But at the state limitation for the federal government to collect is the statutory limitation for federal government is 10, right? But for the state, it is all different. So you want to make sure that you understand how long they do. So this deadline, the 10 years deadline applies to tax return that were filed where the taxes were due. So let's say if you have tax return in 2020, let's say 1995. Okay, so it's almost 10 years, right? But let's say you have a tax return for 1995, but you never filed. It doesn't expire. It files, you have to file it. If you file it in 2025, that due expires in 35. Does that make sense? So you have to really file it. Just make sure that you know. And then the trigger for state is very similar to the federal, but a lot of times when federal government did audit, the state will update your taxes for you to pay more on the state. So, but in the state, every state is different. They're running their program to decide who to audit. A lot of times, there are times I can see that the state has a focus on, this type of industry. For example, they want to audit the restaurants for a period of time. Then you will see a lot of opening for the restaurant audit. So the state is a program driven, but the federal audit would link into the state. So let's say federal audit said that you didn't report $1 million income, then you paid federal taxes of $500,000 already. The state will come too, so you'll probably end up paying about $250,000 for the state taxes if the state is an income tax state, right? So just make sure. Engage professional help is really, really critical, because the role we play as your professional you hired and is to directly dialogue with the auditor. The auditor likes that just because we speak the same language. So auditor asks about things we know exactly why the auditor is asking, so we can prepare the documentation right to the point. So, one of the auditor told me that, oh, we love to work with professionals because if I ask for mileage, they're not going to give me a bunch of gas receipts, because that's what my client do. They literally bring a box of receipt to them. Not only gas receipts in there, and the diapers and everything are all in there. So the auditor has to go through them to sort. They're not doing it. So, but for professional, we know exactly what the auditor is asking. So if the client has the log, we give the auditor the log. But if the client don't have the log, we will create one. We tell the auditor that, we don't have a concurrent one. Can we do a one for now, but reflect on certain backups? For example, our client's calendar. For example, invoices. Sometimes the invoice has the date of travel as well. So those are the things we can do to get one for what exactly the auditor wants. That's why to hire professional, not only your job, you don't have to worry, and also the auditors enjoy that. They can get their work done faster, right? So then the other benefit is when you hire a CPA, hire our firm, you don't have to show up with the auditor anymore. You're done, and you can just rely on us. We're the one worried for everything else. All right, so now we talked so much about the audit, and you sort of have a good understanding already. If you still have questions, specific question about the audit you're dealing with right now, and you have these 6 partners, and you have me, Dr. Hao, and Sang Mo, Kwan. All of us are familiar with the audit, and Dan is on the legal and the business consultation side. And then you have a Derek. Derek is the computer IT side of brain, and for our client and for our firm. So we have, Derek has a team to work on the IT. With that said, I'm showing my last slide. Is last but not the least, because I want you to subscribe to our channel and to learn what we come up, and we always have interesting topics to show you. And you can email Catherine@communitycpa.com, because she is the brain for what need to be talked about at what time, and very quick to react the market need. So we do market study to know what people need to know. Then we come online to talk. Of course, we are opening 6 days a week. We are a CPA firm, open 6 days a week all year round. I know it's tax season. A lot of firms open 6 days a week, but they don't do that whole year round. That's just our operation for the past 28 years. So count on us. We are always available to you. And I'll talk to you